Welcome back. You're watching Sokoni here on Morning Prime. Of course, we continue with the discussion on the free fall of the shilling as it is. As you can look at the editorial cartoon recently drawn by Gado. It is going down the rocks as it is. And this is what we're discussing, adversely affecting the affairs of the country as it is. And now the CBK is also saying we are now hands off on this. Let it just course correct. It will prop up, it's avoiding intervention on trying to prop up the shilling. So what is the way forward? And you think this is the wisest of fashion that the CBK should actually just leave it to course correct itself?
Two quick points about this course correction of the shilling. For many years now, the trading account, meaning if you actually take the goods and services, we've always had a deficit. So we import more goods and services than we sell. And it can be as much as $5 billion, $6 billion, trade deficit. However, if you look at the other flows, meaning people coming in to invest in the stock exchange, diaspora remittances and so on, they have always been strong enough. So when you look at the net position of both the goods, trade and goods and services, and the financial flows, we end up with a small positive balance of payment. So the reason IMF argues that the shilling is overvalued is because we always have a trade deficit. Now, the theory, of course, is that if the shilling is weak, those who are buying our goods will find our goods cheaper, and therefore we are going to sell more. Somewhat contested theory, but that's the theory anyway. Now, what is, before we went on the break, I think the panel made the point that the remittances are themselves declining. And they're declining because the Kenyans in those places where they work abroad themselves are having economic difficulties. So they're not able to send as much as they used to, and therefore you can expect. Now, if you look at the data though, you can't help but think that negative sentiment has something to do with it. That if you look at the first 6 months of the year, up to June, we still had a slightly positive balance of payment position, yet the shilling is just tumbling. My view as an economist is because of our expectations of what is going to happen. We expect, and it has happened, the Fed in the US will continue to increase interest rates. So many people will continue taking their money out of, for example, the Nairobi Securities Exchange to go and invest in American assets because they can now get a bit more there. So what should we be doing? I go back to the point we made before the break, Bill Okello and I, about looking at who our real trading or who our biggest trading partners are and using the opportunities there, and that is the East Africa Monetary Union. What the president and his colleagues in the neighborhood should be doing is getting it started, and all the groundwork is ready. The East African Monetary Union could be operational this September if we wanted it to.
So yeah, I think it has been accumulating dust since then. So is it also a matter of qualitative easing that came from the United States, especially during the Trump administration when there was COVID-19?
Well, I mean, I guess
we're getting the blowback of it?
Well, yeah, for a long time, of course, there was easy money. I mean, the many central banks in the Western world, encouraged a lot of money supply as a way of stimulating economic activity. And now, to manage inflation, they are raising interest rates in order to bring down money supply. But you see, all countries, we operate in the same world. So you must answer a question like this. Why is Djibouti, our neighbor, how come inflation there is about 3%? What is it that they're doing correctly? How is Seychelles, which is our neighbor here, also just dependent on tourism, how come the inflation is only 4.2%? So there are certain things we ought to do that can make or improve the circumstance for everybody.
All right. So you talk about the diaspora remittance, and I think when you look at Uganda, it is one of the country that we saw highest flow of diaspora remittance coming into the country. If we can follow what is happening with this political spat that has been going on between President Ruto and former President Uhuru Kenyatta, and especially what we have in East Africa so far, where Museveni is looking to the West for new milk market. I just want to read a snippet of it so that at least I can give you a broader understanding, because it is getting to be a bit personal as far as this war is concerned. And they're saying that on June 23, 2023, Brookside Dairy Uganda sent home at least 200 workers, saying it has been forced to cut production by 75% as it has been unable to export milk production since March. Kenya is Uganda's largest market in East Africa, and Brookside says Nairobi has declined its 116 export permit applications. And this development, which is blamed on the supremacy battle between regime of President William Ruto and his predecessors Uhuru Kenyatta, whose family owned Brookside, has left Uganda milk farmers and processors on the brink of economic ruin, and Kampala is now aggressively looking for markets further outside the region. Should we have gotten here, Bill? Especially now with this spat and the way it's now affecting business as well. And what is the ripple effect, especially in the East African community?
If you read that story further down, it talks about politics being the main reason.
Yes.
You know, you ban today, you allow tomorrow, you ban today. And it's interesting that I know for a fact that even now the government is allowing or licensing people to import powdered milk from outside the country, but not from Uganda, because of politics.
Because of politics?
It's because of politics. Yeah, I know friends who have just obtained, permits to import. So, and I think this is what I've just said earlier, that the most important trading partner for us, the largest, is still Uganda.
It's Uganda.
This is the guys whom you need to talk to.
Every day.
And I think I have never thought for one moment that this government will do what the other guys were doing, profiling businesses, and it's becoming an art by this administration, unfortunately. And this is what is causing all this. When you start listing this business belongs to so and so, they should not be allowed to do this.
That's it.
This, you are, anybody that they want to kill, you are a cartel, you are this, you are that. I think the way this government is dealing with businesses, profiling businesses, and giving them names, you are going to discourage people from coming to invest in this country. And East Africa is a very important. That's why we have East African community. It took many years for the President Kibaki and others to try and bring this thing back to what it was after it collapsed during Moi time. And it's important because you are looking at the population. In fact, when we are selling Kenya, even now when this government is selling Kenya, they say we have 200 million people. We are the hub. We are the gateway to Eastern Africa. But when you are dealing with that East Africa, you are, every day we are reading about trucks are stranded on Uganda border, trucks are stranded on Tanzania border. It's small things that can be resolved, and then you are asking for stay of application on various East African customs management tax issues because you want to, your tax has become unpredictable. You are changing tax policies, erratically, the way you want. And so I think it was the whole idea of having this East African community and a unified tax management system is to make the whole region attractive to an investor. So that when somebody comes to put shop here, he's looking at the entire region and looks at the entire policy environment. The business environment. It looks at the tax, regulatory, legal, all other judicial, and you look at all those things. This is why, let me tell you, some investors are not willing to enter Kenya because the first condition they ask is, can you guarantee our investment? Yeah, I'm told, for example, you can't expect Saudis. They can come even their hundreds or with a trillion, but to get them to invest in a country like Kenya, they'll tell you, okay, sign for us, please. We want guarantee of our investment. Should anything go wrong because of taxation, because of this or that, we can get our money back. So, I mean, you can't, with the kind of erratic, personalized approach to businesses, you're going to discourage investors. And I think the most significant investment we have as Kenya is in those countries. We're the largest investors in Uganda, in Rwanda, in Burundi, in DRC. So it's really, the stakes are very high. You cannot go into those petty things. You may not like the rich, but I think his business is not about him. It's about an entire ecosystem that depends on that business.
The bottom line is
so I think it's being very petty the way the government is approaching businessmen.
Right.
And unfortunately, the trade ministry is a disaster in this country. And it's so sad that the president believes that is the best man he's ever had.
I think if we look at the whole essence of the East African community, the way it was set up as a quote market. That's what it was.
But where's your mic? It's disappeared. Okay, let's hear from Professor Gituro and as I sort you out.
I would give a parallelism here. And I do recall 2003 when Kibaki came to power. And one of the things which was brought up was by that there's a piece of land somewhere which it's occupied by Moi and doesn't belong to him. And interesting, the president, then Kibaki, even went to his extent of getting the people from the land office and they got the title for the president, Moi. And it was delivered to him. Despite all the what he had gone through. And at times, I think we waste useful time discussing things which don't make sense at all, in my view. When you get somebody there saying, and somebody thinks, we wish we had sent Mudavadi or something to Rome, and say, we are going to get Kenyans in foreign office who are going to really sell this country in a big way. And we find ourselves, and perhaps I'll put what Bira said, I think it's what we call personalized politics of revenge. Very personalized. And when you are at that level of leadership, you are beyond that. Because at the end of the day, we close that, we'll close Brookside, we'll lay people off. What are we doing? We are putting more people on the streets. That's what you're really doing. That's the bottom line. And we know what it means, putting other people on the street. So this idea that they are shareholders and they are not shareholders, there's something I was taught in the business school. The word no is a very good, strong management. But also, you're given 1 month and 2 years to talk less, but do more. You're having a situation whereby, I wanted to see this area, there were 2 fellas who were sleeping somewhere. And then in the middle of the night, Bill is telling me, it's so cold. But I started telling Bill, I am enjoying the stars. It's so beautiful. Then Bill tells me, silly man, our tent has been stolen. We are here thinking that, it's nice, it's whatever, but the tent has been stolen.
It's all about perspective.
Yes, and I think it's important that we step back as a country, really. We all need partners.
Right. But even when you're talking about we stay back as a country and we need partners, I think on a personal level, when you talk about healing of a country, I think there has to be healing of these 2 leaders as well. Because this is emanating from a very scarred ego that now we can see the repercussions. So if they're fighting the 2 of them as well, it's affecting the entire ecosystem, as you said. How can they be brought together to reconcile? Because there's a need of reconciliation. Otherwise, this will also be continuing. It will be the gangs, it will be Mama Ngina, it will be retaliation. This is what we're seeing now. The fight with businesses, Alimvedi Farm, and all this is affecting the perception. It's affecting.
Let me comment before Patrick, because he is the business leader here, so he can have the last word. Look, selling the country, meaning our diplomats, for example, should
Right.
be trying to get investors. Well, I'm sorry to remind you, investors are not some foolish people sitting someplace with a lot of money just waiting for any story that you're going to tell them. If I'm an investor, saying I'm a French person or whatever, and I'm watching, reading, looking at what you're doing, this part that you're now talking about,
Yes.
I will ask myself, if your retired head of state can be subject to this sort of effort, what about myself as a foreigner who you will come and look at my asset and then you'll tell me, you foreigner, what are you doing here? Please leave. So that the way you sell Kenya or your county as an investment destination is by first cleaning up your own house. You can't foul it and then expect investors to come. Both at national level and at county level. And unfortunately, we are seeing this also at county level, where governors come into office and they try to undo, including commercial contracts, because of perceived local rivalries. And this really is taking us back to the 80s, where profiling of businesses
Right.
was quite strong, and that led directly to really the collapse of the economy in the turn of the 90s and into the mid-90s. It doesn't bode well for Kenya, and I agree with the moderator that what should be happening is senior government must rise above this pettiness of taking political competition from previous periods to the height that they're taking it now. And in any case, however if you are in the current regime, however you may look at it, that partnership that they had, the fact that they were in the previous regime, is what gave them a platform to run for highest office as they did, and therefore they have no real reason to dial down to pettiness. Patrick.
No, I think I want to go back to where I was at the beginning, before my technology stopped working.
Sorry about.
Yeah, and talk about the whole essence of what the East African community was and should be, and we want it to go to into the future, even as it expands into DRC, Ethiopia, Wapi, all those places. The key thing was that you're creating a market for all of us combined in terms of business. So when you look at milk as a commodity rather than who makes it, this whole region requires more milk. Doesn't matter where it's coming from. And you find that different countries are actually importing powdered milk and reconstituting it because there is not enough milk in the region. So to stop milk coming into a country for whatever reason is completely counterproductive to the fact that we are now beginning to stifle the opportunity that the East African community brought about. We're not talking about chickens, which was another thing, chickens and eggs, which was a big battle. We're importing chickens from Brazil.
Yeah.
Why? And that is requiring dollars. I mean, we can, as you quite rightly said, regionally, there is a lot that we can do to stabilize the currency, right? How many tomatoes are being stopped from coming from Tanzania into Kenya, right? And yet, we are exporting tomatoes globally from here, as in the horticultural sector, and we don't have enough tomatoes and onions in Kenya. And Tanzania is producing that and sending it to this country. So ideally, we should actually start thinking differently. It's not about me knocking X, knocking Y. And a lot of times, people are actually, now I'll probably bring a new dimension, people are weaponizing the private sector in terms of politics, right? And weaponizing the private sector is not only about this particular thing you're talking about, it happens quite often when you're finding the border being blocked about something. That's the private sector being weaponized in politics. And I think we need to start raising this issue so that it is available into the public. And when you talk about investments coming here, right? What Bill was talking about is that an investor now wants a sovereign guarantee
Yes.
when they're coming in. And when you talk of sovereign guarantee, that adds to the debt of the country, by the way.
Yeah.
Because the sovereign guarantee
the commitment.
is an undertaking.
Yes.
And it becomes a debt.
Indeed.
Right?
Yeah.
And the government is not going to sign any more sovereign guarantees. So these investors are going where they perceive that the investment environment is going to be a lot more predictable. But in this country, currently the climate is not that predictable.
Right. And
And I'll end by just talking about one item.
Yes.
Where in Ethiopia, when you go as an investor and you're arriving and you've created all your appointments, the minister sends their personal vehicle to pick you up from the airport and bring you to their office before you even go to the hotel. And you are given coffee, you're welcomed, and they are on time waiting for you to come in. In this country, investors have come in, meetings have been arranged, they've had to find their own way from the office, from the airport, and they've come in, they've gone into the office of the minister, and they told the minister has been called away for an urgent matter. And that investor sits here for 2 days and has to go back and has not met anybody.
And there's no
That happens
origin,
very
nothing.
often in this country.
It happened last month. I'll tell you, just finish.
Yeah, it happens very often in this country. Is that creating a right sort of a right environment for investors when just their arrival and coming in to talk about investing is treated in that manner? That's why you're finding Ethiopia is getting a lot of investors. They have their own problems, which are different, but people are running to that place to invest compared to here.
Which is true.
And even Tanzania and so forth. So if you're going to talk about increasing investment in Kenya, we have to change a whole range of things, including what happens and has been happening for a long time. People want free carry, whatever it is, free carry shares in the company. Unless you do that, I'm not going to license you.
You see,
Frequency
I want to give you
upfront.
another example last month.
Yes.
There was a regional expo here for crude palm oil, a regional East African, they hold it every year, organized by the Malaysian government. The Deputy Prime Minister of Malaysia
Was here.
who was also the Minister for Plantations and Commodities, was here. He was completely ignored. Forget about a minister or some high-ranking official attending that conference. That gentleman was completely
Ignored.
I'm telling you. And accompanying him were dozens of Malaysian businessmen, including one who owns one of the largest edible oil factories here, who just opened in 2015. They put in billions to put it up. So, and you can't understand. I'm telling you, the way we are doing things, it's not as easy as just running around. You know, the investors are not people you just tell stories. You can't, but the way we are treating our businesses, because of expediency. This happens because that particular country, for example, or that particular function may not work for somebody who has a minister having some other arrangement with another country. Because by the time he was finishing his 2 days or 3 days finish, the day before he could travel, another delegation also was coming from Indonesia, led by a minister. This one was now received all the way into State House. The other one, the deputy, is not even received by a single minister for 3 days. So you can see the politics of business, people looking at their vested interest. And this is unfortunately what kills investors in this country. That's why the DFI's direct foreign investment inflows in Kenya has been declining for the last 10 years.
I was just flipping through the papers because of the flight of investors.
For one of the organizations.
He's
Indonesia. He's a trading partner.
Of one of our organizations.
Yes.
So no wonder now there was a very tumultuous welcome for the Indonesians and not the Malaysians as well. I can give also first-hand experiences. There was a very wealthy tycoon from Hungary that wanted to come and invest to put up a manufacturing center here for aircrafts, aviation center, put up hangar, the whole ecosystem of just manufacturing firms. And he went through the frustrations. They were here, they were seeking audience, with the upper reaches of government on how they can partner with Kenya to do that. But they got the dead hand of the bureaucracy. And of course, also they wanted facilitation as well. That particular company opted to go to Uganda. Now that's where now they've put up also that particular manufacturing farm.
You know,
We lost an opportunity.
You know, the president one time said, and if you lie, have some intelligence in that lie.
I hope you're not telling me.
No, that's Kibako saying, even if you lie, have some intelligence.
Of course, I'm just
so how you treat people, have some level of intelligence. And when people get out of government, they say, oh, I used to get phones, now I don't get it. It's because how you behave in the government. It's like a small God you have there. And I can tell you my 9-10 years in Vision 2030. Until one time I actually told of PSS, we're in Harambe House, 10th floor. And you get so mad that please, each one of you, let's look at the street, Harambe Avenue. There were so many Kenyans. If you come here 10 p.m. in the night, you look, there's nobody. But they're not sleeping in your house. They have somewhere. They are taking care of themselves. Let's not behave like we are not touched with our people. And that's it.
Thank you.
I actually told one, we went to office, he had 3 phones. And I asked him, surely, he's a PS now even as we talk. How can you run the meeting, you have 3 phones on the table? But he's telling this one, before this deal, this one might be on the table.
And I just want to add there, of course, we are focusing on foreign investors. I tell you, in my experience, both in government and from IFC, first of all, focus on the Kenyans themselves.
Yeah.
Because if the environment is good for the Kenyan businesses, it will be good for
somebody else,
for foreign direct investment.
Absolutely.
I can tell you the story, still ongoing, of us trying to manufacture tuk-tuks in Nyahururu. Okay? In the negative pressure that we have to overcome, including standards that are not being applied to imported tuk-tuks, but are being applied basically to stop us from doing it. So we as a republic have to sort out. And I agree with Biro that unfortunately now, when we look at the way that docket is going and the leadership there, it is not, we have no hope for the foreseeable future to resolve some of those things for Kenyans. And if we fix it, if we fix the business environment, the operating environment for the local companies or for Kenyans, it will.
Absolutely.
Indeed. Yeah.
Indeed. I want us also to just touch briefly before we go to the Kenya credit rate status as it is right now with the sugar industry. And now we can see the prices have really gone up according to the latest information that we do have. Sugar prices go up as factories remain closed for 5 months. I've never had this happening in the country, that we have to close our factories because there are no canes to crush. So we give them room for canes
to grow.
For canes to grow. This has never happened in the history of. So where is this sort of decision really coming from? So there's a shortage of mature cane that it says led to the closure of mills, which has now triggered the hike as traders limit the product.
The whole of the sugar sector has been undergoing countless commissions and whatever it is that have been trying to sort out that sector. And that sector is extremely politicized, but also extremely unionized, for want of a better word. And you find that at the end of every committee that goes, or task force that goes to look at this thing, everybody stops waiting for the task force to tell them what to do. And there was a recent one that actually completed, and they said that all the sugar mills should be revived, and the local people should be involved in it, and they should have shareholding in those places and so forth. And also the Kenya Sugar Board, I think, was disbanded or something like that, who actually used to bring some sense into that sector. They also used to lend the millers money when they needed to do maintenance, and then they'd open up and so forth. So you're finding that you are going into a sector that has no direction, zero, completely. And the growers, if they grow, who is going to mill in the first place and at what price? Because they opened up completely the issue of who can buy sugar came from where. So these people are selling to whoever comes in that offers them the best price. And what has happened is the price has been going down. Millers are closing. So the guys who have now got mills that are operating are telling people, this is my price. So people are not putting sugar anymore because it's not worth putting it up. So the industry is basically dying. Mumias used to at least do something. I think they closed it recently. The Ugandan stroke Kenyan company that was running it has been stopped because of whatever. I think it's again probably politics again. They've been stopped, and that was beginning to grow. So I think the sugar sector, the way it's been politicized, is just going beyond ICU. I think it's just going to die completely. And the only way that sugar can come back to Kenya is, in my view, two things need to happen. One, all the old sugar mills, forget them, just shut them. Because the technology they have and the cost of reviving that technology is too high. And that is why we're having to protect the production here in terms of the cost of production from imports from the Comesa region. Secondly, the sector to be revived only needs 3 mills, not 10, not one in each growing area. So you need one in Western Kenya, or the old Western Kenya, which is Kakamega, Busia, Bungoma, that area. You need one in around Kisumu, and you need one in South Nyanza, and then one in Narok, in that area. That's it. And they become world-class, large enough to be able to manufacture at the economies of scale that gives you sugar at the right price. We are competing with a company in Sudan, Kenana, that can supply sugar cheaper than our guys are producing from Sudan shipped into this country without paying duty. They're cheaper. And even
use
duty,
irrigation. They don't have, they use irrigation.
They use
irrigation.
Yeah. And we've been talking about a dam in Sondu area for I don't know how long to irrigate that area. I think it's now that they're starting to build it, and then it's creating, people are fighting over that. So I think this whole sugar thing needs a thorough surgery.
Let me comment.
All right.
You know, I have also lived in this country when the 11 sugar factories were running very smoothly in the 80s. But in the 90s also, I've been involved as a consultant on looking at the cost of production of sugar through my firm, also the IPO for the privatization of Mumias, and handled it. And even when people like Aaron Trinkong was running Chemelil, very profitable. I remember we was involved in that company also, and they were actually exporting to EU. So the genesis of... I was
a shareholder.
Yeah, the genesis of that thing was is management, number one. The moment you put in a political crony to run something which is a commercial enterprise that must compete, that must be profitable, production costs was a major issue. Because I did a consultancies on that thing. But that was one of the reasons why it failed. But today, let me tell you, the reason why I've never seen a situation where for 5 months, millers have been told to shut down because there's no cane. It's always been the opposite. They shut down only for maintenance.
For maintenance, yeah.
For a few weeks.
For these archaic machines you're talking about.
You see, the reality is the last few months of imports of duty-free sugar. Sugar is one of the most lucrative deals for people in government because it's hot stuff, moves very fast, and it's on the high seas available. By the time you are getting your waiver or your tax or whatever, your ship is already locked for you.
The following
day, can dock in Mombasa, and you make quick money. So I think clearly what has been happening is the farmers in Western Kenya, 2 million people, have been directly involved in sugar. No attempt has been made to consult even with people who are experts on these things. I'm telling you. What has happened is that the millers, the business has been killed. Mumias, which has been the largest, producing nearly 2/3 of the sugar that requirement in the country, has been killed. And so what has happened is gradually farmers have become disillusioned. I don't know whether Patrick anymore grows cane, but if you grew cane, what has happened is two things. One, you killed the cane development through, there used to be a cane development levy, which goes to the Sugar Development Authority.
Yeah.
And this way the outgrowers are being supported, to plant and to harvest. That was a very critical thing.
And better varieties.
And that was one of the reasons why people have no capacity to put money for plowing and all those things and harvesting. It's an expensive business. So the cane development levy was very critical for outgrowers. Two, then you have killed the millers. The largest ones, at least, are dead. So what is happening is now with my farm, nobody is taking the canes. Remember, canes were getting old. Nobody was harvesting about a couple of years ago. And people were losing. And, so what has happened is gradually people have stopped planting. So the reality is, it's not about cane not being ready or harvested or what, but because of the way the industry has been killed, people have lost interest in planting. So they are private, like West Kenya has been doing very well. But some have been doing very well, the private ones. But you see now, when you flood the industry, the country with imported cheap duty-free.
So this is it's just been a deliberate attempt
to kill
the industry as it is,
And probably, the Kenyan politics also. Kill this one and put up yours. So don't be surprised.
That's going to ask you,
Yeah.
If you see something else propping up,
then this is normally what happens in the. There was a plan to privatize. You remember when the president announced last year? Then suddenly we were told they are off the table. They are not going to be privatized. It's so when you add all these things together, you might think there's a plan to put up something private and probably let this one just die their natural death. But I think it's very unfortunate. 2 million people are directly surviving and 10 millions more indirectly in the entire Western Kenya. This is a critical thing that the government should have spent time. The only thing that 10 years administration of our former administration was doing was pumping $1 billion, $2 billion to Mumia. Those are, those just political gestures. That is not really an attempt to try and revive that industry. That's why even investor, when he came in now, Mumias, you see all the politics. Or you are this family or that family, you play them out, and you can't do business really. So this is a sector that has been killed. If I was a politician from Western Kenya, frankly, this issue would be more. I would be on the streets. Forget about the cost of living. I will die on those streets if I was a politician from Western, because this is where these people have the single most competitive advantage than any other country in East Africa in producing. But this have been like Mumia. The soil there is very good. The variety, of sugar that can be grown there in terms of its yield and, the tons cane sugar ratio, that is an area that they should have really done something. But today, who would invest?
Indeed. All right, we need to be winding up. And we know that global rating agency Fitch has revised Kenya's credit status to negative over the deteriorating macroeconomic conditions, implying that taxpayers will pay more for loans procured by the government from the international financial markets. The agency, in a statement last week, announced that it had revised the outlook on Kenya's long-term foreign currency issuer defaulting rate, that is IDR, to negative from stable, and affirmed the IDR at B. The downgrading is largely due to the country's increased external financing constraints amid huge funding requirements, including 2 billion shillings Eurobond that is maturing in 2024, weakening international reserves, rising financing costs, and uncertainty regarding the fiscal trajectory due to the implementation risks of the announced tax hikes through the controversial Finance Act 2023 that has caused social unrest. Fitch notes that Kenya's sovereign external debt service will rise sharply to 4.3 billion shillings in the 2023-2024 fiscal year, including the 2 billion shillings Eurobond repayment due in June 2024, up from 2.8 billion shillings in the next or in 2022-2023 fiscal year. In May this year, another rating, that is agency Moody's, downgraded Kenya's long-term foreign currency and local currency issuer rating and senior unsecured debt rating from B2 to B3 on rising liquidity risks. And of course, this is where we want to wind up the show with and look a bit of research as well. But briefly, I know we've discussed about the ratings and how it affects us. We can just get one-liners from Moody to Fitch right now, what does it really portend for us?
Credit rating, credit rating agencies, in fact, rate companies, they rate counties, they rate cities, they rate countries, and the credit rating agency looks at, it's a creditworthiness assessment, that how strong are your cash flows and your financials, how creditworthy are you as an entity, and it is all the way from the individual through companies, as I said, counties, to the countries. What it does mean, and the reason credit rating agencies are downgrading Kenya's rating is that when they look at our financials, they can see weaknesses, as you project into next year and the years that follow, and that's why they have downgraded. As you said in your commentary, they are looking, for example, at the spike in the debt service, because what is happening next year, there is a bullet payment of a 2 billion euro bond, but also other, including the fact that the shilling is weaker. So when you look at it from a shilling term, the amount of debt service has gone up quite dramatically. And if we have to raise money, for example, in taxes to pay, we raise money in Kenya shillings. So if that's actually what you are targeting to use to repay, then you have to raise a lot more because the shilling has become weaker. They're also looking at, of course, growth prospects. They are looking at political risk, including some of the issues you've raised here, about how we are treating each other politically, and treating businesses and so on. And all that goes into the assessment of political risk. Generally, what the rating agencies are saying, Kenya is riskier. What it means when we now go to borrow, for example, you've seen reports of syndicated loans, perhaps even the thought of a dollar bond issued locally and so on. When we go to the market would demand an even higher premium because they perceive us to be more risky. Mm-hmm. Yeah.
And we have also the Sukuk and submarine bonds that also are in the offing as well. I can see legislators want that to be streamlined within also this, the CBK below. Should we go the Sukuk way because of interests? I don't know how you normally cushion that as well when it comes to Islamic financing. You can tell us.
No, I think unless there is an amendment to the Banking Act which would allow compliance with the Islamic requirements for Sukuk, I don't think they can, because Sukuk you require tangible assets that must be available as a collateral. As investment. The investment is pegged on, and the government is not willing, from what I know, to put an asset belonging to the state out there as a security. Remember what happened to the KPS story on the loans for SGR? So it's not in a country like ours, very easy for the government to put a particular asset out there as the security, because when you're investing, it must be pegged on a physical, tangible asset that an investor can have a confidence in before you invest. It's not on a. So I think I don't think there is an amendment I've seen even in the even in the Finance Act, I think but those are for smaller investments, but not regarding this. So that I think may not.
But
be.
I've seen also the MPs have picked up interest in that, so they want.
Yes, MPs. But even if they do, the way our country is, Sukuk may not be a very. The one they did, that infrastructure bond they did a few years ago, you remember?
Yeah.
And the Islamic banks here bought like FCB and the Gulf Bank and so forth, and later it transpired that the Sharia boards of the bank said no, this was not compliant with Islamic, and they had to dump it. So I think it's not easy, but I think Moody's is clearly that means the cost of finance, the cost of borrowing will be higher now, because then our lending will be deemed to be riskier, and so if the government goes ahead with Eurobond or with any of these other alternatives, or any of these other syndicated loans that they are collecting, the cost will be higher. I can assure you it's going to be difficult to get it, and when they get it, it will be higher. Of course, we're not the only country. There are many countries, I think Israel, but many countries are having these challenges. But if it's for short term, the impact may not be very bad. But I think if it is long term, and the way we are not looking up in the economy, I think it's really going to have an impact. Even for the private sector who want to place, on the capital markets here, bonds or whatever, the corporate bonds or whatever, all of those will be affected. Generally, it's a sentiment that, look, it's riskier to invest, to put money in this country. That's basically what Modi is saying, that the credits here are risky because of liquidity.
All right, let's get our headline thoughts so that we can wind up. We'll begin with Professor Vituro Naino.
Yeah, I think it's all a question of being capacity, character. If you don't have it, then I will not come for you. But before I do that, there's something I didn't want to ask whether the experience with the others here. Of late, we have been getting very high power bills and water bills. Is that the same?
But you are warned. Weren't you warned that beginning, was it beginning the 1st of June? Yeah, the cost of electricity is going to go up, and water as well. That's the reason.
How do you move from 1,000 to 7,000 in power, in water?
You got a welding machine in your house?
Water. It's something I'm actually putting, and it's something we need to be careful, because it's, and I've said this before, it's a personal thing, so it's an easier way. Because I won't complain, you won't complain, you're on your own.
Yeah, we need to interrogate that.
We need to interrogate
what is the rationale before that? Yeah, it's true.
And water.
What you're seeing,
because I know
take you out of your misery, a lot of these agencies are deploying electronic meters. Yeah? So all the arrangements that people used to have now are getting less and less. So now,
I hear you.
Your meter, in a lot of places where people are paying much less, the meters have been installed which are electronic and are being read centrally. They don't come to your place anymore.
I'm not sure about my brother.
So
it's an estimation.
It's so no, there's no more estimates. They're actually reading your meter correctly. The guys who used to come and read your meter used to be paid off. So the guys who used to pay less, all of a sudden their bills have jumped to the real thing. But also that is compounded with the cost of the power and the cost of water. Because what you are paying for is non-revenue water. And non-revenue water is what, 40%? I know you did some stuff, 45, You did some stuff, you're trying to sort of to get water investments in the county at the time. Non-revenue water of 40% means that you're treating water at this price.
Thank you.
You're losing 40% and somebody's...
Anyway, my last shot is this. I go back to 1979. Louis, 16. Remember? There's no bread. Why can't people eat cakes?
19 or 1789.
1789. I think it's important that we are really telling Kenyans there is no maize, so find what you can eat.
That's Louis XVI of France.
Yes.
Right.
And I think it's important. Sorry.
We need to wind up, yes.
Yeah, I'm waiting. But my parting shot, let's treat Kenyans with some intelligence. The information we are giving there is a lot of disrespect what you're telling Kenyans.
Thank you. Patrick.
I share the same sentiment. I think we just need to get trust, and we need to stop pontificating on top of boxes and telling Kenyans things are okay. They are not. We need to get the truth, and then we need to get Kenyans to be enrolled in sorting out the problems for this country.
Thank you.
My parting shot, respect, because look, ladies and gentlemen, you may not like Nderitu. You could even insult him and be the world champion of insults, but the cost of living is still high. Let us solve the real problems affecting Kenya.
Right. Indeed. Bill.
I'll go back to my personal story.
The donkey.
The
donkey.
We say in our community, if the donkey falls into a well, there were no, you don't have those things which are there today.
Yeah.
What do? You ask the doctor, the donkey,
please come out. So you're calling the donkey this morning?
Yeah, you're calling them, please come out, please come out. This is your first, we're seeing a situation where, our leaders are asking the economy, the story of the shilling. The shilling, where are you going? You can't get the economy to, or the country to come back by those kinds. I think people need to do work. That's what they need to do.
Thank you guys. And I can see also a comment here from one of the CEOs saying I do remember Boeing company wanted to set up a hub for Boeing maintenance center for Africa in Kenya, but due to our Kenyan officials, they couldn't work with them. Ethiopian officials got the information from the media. The Boeing team were invited by Ethiopian government, and thus Kenya lost their chance, and they were offered a place in Ethiopia. That's how